Welcome back to RV News, your trusted source for real-time updates, deep dives, and expert analysis on global currency reevaluations, economic movements, and what it all means for investors like you. If you're holding Iraqi Dinar, Vietnamese Dong, or any other potentially revaluating currency, you've just landed in the right place. Today, we bring you an explosive and historic development that has sent shockwaves through the foreign exchange markets worldwide. That's right, both the Iraqi Dinar, IQD, and the Vietnamese Dong, VND, have hit peak values in 2025, creating what many are calling the most significant Forex explosion in decades. This is not just a speculative rise, this is a structured, policy-backed, market-shifting rally that could change the lives of millions of currency holders globally. So buckle up and stay with us until the end, because we're going to break down what happened, why it happened, and what it means for you. Over the past few weeks, there have been rumblings in the financial world. Early whispers in private banking. Circles hinted at something big brewing in the Middle East and Southeast Asia. Central banks were quiet. Institutional traders were unusually active in emerging market currencies, and high-net-worth individuals began moving quietly into positions. They've been watching for over a decade. But as of this week, those whispers have become roars. The Iraqi Dinar surged to levels not seen since before the 1990 Gulf War, and the Vietnamese Dong broke through critical resistance thresholds, sparking immediate attention from Forex analysts, hedge funds, and even government financial agencies. For those who've long believed in the eventual revaluation or RV of these currencies, this is more than validation. It's history in motion. Let's start with the Iraqi Dinar. As of June 2025, the IQD has reached an unprecedented exchange rate of 1 USD equals 1.35 IQD. This effectively reverses decades of economic suppression, war-related depreciation, and foreign manipulation of the currency's true market value. It wasn't an overnight process. Iraq's government has worked tirelessly in recent years to modernize its financial infrastructure, digitize its banking system, and establish regional trade agreements that no longer rely solely on the US dollar. They've also built closer ties with the BRICS alliance, and there's been a strategic pivot toward gold-backed settlements and the integration of blockchain technology in cross-border transactions. All of this helped to build international confidence in Iraq's economic potential, and now the Forex markets are finally catching up. But what truly pushed the dinar into this explosive growth phase was the announcement from the central bank of Iraq confirming the implementation of a managed float system. This allowed market forces, under the guidance of monetary authorities, to determine a more realistic valuation of the currency. Add to that a dramatic increase in Iraq's oil exports, now reaching 4.6 million barrels per day, and you have a nation that is not only rich in resources, but is finally getting its financial sovereignty back. The combination of monetary reforms, asset-backed fiscal discipline, and diplomatic realignments has triggered a domino effect. Foreign investors, many of whom had previously stayed on the sidelines, are now scrambling to get into the Iraqi market, particularly in infrastructure, tech, and agriculture. And then there's Vietnam. The Vietnamese Dong has now crossed the 18,000 per USD mark, a valuation jump that stunned even the most seasoned currency traders. This is the strongest the VND has been in modern history, and it represents a paradigm shift for Southeast Asia's second fastest growing economy. Vietnam's economic boom over the past decade driven by manufacturing, tourism, digital exports, and strong trade ties with China, the US, and the EU has set the foundation for this moment. But like Iraq, the real change came from the inside out. Vietnam's government introduced aggressive anti-corruption reforms, encouraged massive foreign direct investment, and recently launched the country's first sovereign gold reserves program. designed to stabilize the currency and hedge against inflation. Vietnam's central bank had long held the dong in a semi-managed float, but with recent economic stability, they've started phasing out those restrictions. The moment the news broke that Vietnam was going to allow a freer exchange rate structure with limited intervention, investor confidence skyrocketed. Add to that Vietnam's new agreements with ASEAN partners to settle trades in local currencies instead of the US dollar, and you can see why this currency is exploding. The dong's current valuation now better reflects Vietnam's actual economic power, and investors who have held VND for years are finally seeing the payoff. This Forex explosion isn't just about numbers, it's about timing. We are in a period of significant global financial recalibration. Central banks are moving away from dollar hegemony. Inflation is being combated through aggressive interest rate strategies, and commodity-backed currencies are gaining ground. The IQD and VND are emerging as new stars in this evolving ecosystem. The revaluation of these currencies doesn't just benefit governments or big institutions, it's potentially life-changing for individuals and small investors who took the risk to believe in long-term geopolitical and economic transformation. Let's take a moment to talk about what this means for investors who've held these currencies for years, some even decades. For many dinar and dong holders, the journey has been filled with skepticism, frustration, and ridicule. The mainstream financial media often ignored or dismissed the RV community. But this moment proves that calculated risk, informed patience, and strategic positioning can pay off. People who bought IQD at 1,200 to the dollar are now seeing their holdings multiply exponentially. A $10,000 investment in dinar in 2018 could now be worth well over $1 million, depending on how and when they choose to exchange. Similarly, those who held dong at 23,000 to the dollar are now watching their portfolio's value rise with incredible speed. Redemption centers across key U.S. cities have begun receiving higher than normal activity, and several Tier 1 banks, including Chase, Wells Fargo, and Bank of America, have reportedly updated their internal Forex systems to reflect these new peak values. Several sources indicate that private exchanges are already underway, with structured payouts being offered to high-volume currency holders. There are also unconfirmed but widespread reports that Tier 2 and Tier 3 banks will open public exchange windows in the coming days, possibly with negotiable rates for those who've registered with pre-exchange platforms. For anyone holding IQD or VND, it is critical to stay informed, verify banking details, and be cautious of scams or misinformation. This is a fluid, high-value environment, and the stakes are higher than ever. From a geopolitical perspective, the timing of this Forex explosion also coincides with a major shift in global alliances. Iraq has formally entered economic cooperation agreements with BRICS, and both Iraq and Vietnam have become active participants in discussions around it. New gold asset-backed international trade currency. While this new currency is still in its development phase, its potential to replace the petrodollar in certain transactions is creating major waves across financial capitals. Both Baghdad and Hanoi are signaling that their economic destinies will no longer be dictated by external forces, and instead, they're setting the stage for self-determination and long-term prosperity. This is not just a revaluation of money, it's a revaluation of national identity and sovereignty. Experts predict that the current rates are not the endpoint, but just the beginning of a new chapter. While some volatility is expected, particularly as speculative trading increases, the fundamentals supporting both the dinar and the dong are now stronger than ever. Iraq is working toward becoming one of the leading oil-exporting countries globally, with recent deals signed with India, China, and the EU. Vietnam, meanwhile, is on track to surpass Thailand as the second largest economy in Southeast Asia by 2030. With such strong macroeconomic indicators, many analysts believe that both the IQD and VND could stabilize at even higher valuations over the next 12 to 18 months. Now, let's talk briefly about the logistics of exchange. If you're planning to exchange your dinar or dong, make sure you go through verified, regulated institutions. Avoid social media offers or unsolicited messages promising secret contract rates or VIP deals. There are legitimate redemption and private exchange platforms, but always check credentials, licenses, and user reviews. And remember, tax implications will vary depending on your country of residence. So consult a financial advisor or tax attorney before finalizing any high-value currency transaction. The IRS in the United States has not yet issued new guidance for this sudden spike, but many insiders believe capital gains taxes will apply depending on the nature of your original purchase and sale. The global market is watching this development with great interest. Forex trading volumes for IQD and VND have reached all-time highs. Institutional funds are adjusting their emerging market portfolios, and governments around the world are paying attention to the newfound strength of these once dismissed currencies. Even the International Monetary Fund has released a preliminary statement acknowledging the structural reforms